Your manager says the word raise, and for a second, it feels like good news. Then someone nearby says the thing people always say, careful, that might push you into a higher tax bracket. You could end up taking home less. And suddenly, the raise has a shadow over it. You go home, you do some math you don't fully trust. You wonder if earning more could somehow cost you money. And underneath all of that is the thing most people never say out loud. You don't really know how this system works. A system nobody explained is quietly deciding what you keep. But here's the part that changes everything. You already understand tax brackets. You just understand them somewhere else. Think about a parking garage. The sign says first hour free, next 2 hours, $2 an hour. Anything after that, $5 an hour. Now imagine you park there for 5 hours. Nobody expects to pay $5 for every hour they were parked. You know, the first hour stayed free, the next 2 hours stayed $2 each. And the $5 rate only applied to the hours at the end. That is how income tax works. Not kind of, exactly. You have understood this your whole life. Nobody told you it was the same idea. Most people picture taxes the wrong way. They imagine one rate stamped across their entire paycheck, cross a line, get a worse stamp. That picture is the whole problem. In reality, your income is split into layers. The first layer is taxed at the lowest rate. The next layer is taxed at the next rate, then the next. Each rate only applies to the money inside its own layer. Money that was already taxed at a lower rate does not get pulled back and taxed again. And before any of those rates even begin, there is a free layer. That's the standard deduction. It works like the free first hour in the garage. A slice of your income is taxed at 0. Only after that do the tax rates start. Then come the brackets themselves. There are 7 federal income tax rates: 10%, 12%, 22%, 24%, 32%, 35%, and 37%. Each one applies only to the next slice of income. Forward, never backward. So when someone says, I'm in the 22% bracket, it sounds like their whole paycheck is taxed at 22%. It isn't. It only means their last dollars reach the 22% layer. Everything before that is still taxed at the lower rates, exactly like before. A raise does not move all your money into a higher bracket. It just adds more money at the end. That leads to 2 numbers people often confuse. Your marginal tax rate is the rate on your last dollar. Your effective tax rate is what you actually paid overall, divided by what you earned. Because most of your money sits in the lower layers, your effective rate is lower than your marginal rate. The number people talk about is usually the highest bracket they touched. The number they actually pay is smaller. So here's the whole thing. You're not taxed at one rate on everything. Your income moves through layers. The first layer is free, then each bracket applies only to the next slice. Your tax bracket names the last layer you reached, not the rate on your whole income. And moving into a higher bracket does not leave you with less money than before. The extra money may be taxed at a higher rate, but the money you were already making stays exactly where it was. So take the raise. Say yes to the overtime. Ask for the number you're worth. This was never too complicated to understand. It was just never explained well.